to HPE's big bet on the so-called intelligent edge and CEO Antonio Neri's commitment to spend $4 billion over the next 4 years in an effort to make more data more useful to companies. That means developing more tech in security, automation, AI, machine learning. I caught up with Neri, who's in Madrid at HPE's Discover conference, and asked about that $4 billion investment and when he expects to see a return on it. Take a listen.
We believe the edge, or the intelligent edge, is the next frontier, is a massive opportunity for all of us, and that's why I made the announcement at the HPE Discover in Las Vegas that we will invest $4 billion over the next 4 years. We will see the return on that investment over the next 2 years. This is a business that's really growing fast. In fact, we are growing the business double digits. And what we are doing there is take the core Aruba platform and adding the incremental capabilities needed to move from what we call the edge to the intelligent edge. Aruba brought the connectivity, and we expanded connectivity with SD-WAN. We added analytics, we added security, and now here at HPE Discover, we're announcing the IoT-ready aspect of the infrastructure and the platform, which is a software-defined platform, so that we can move from billions of things between people and places to trillions of things. And that's the scale that's needed to power this new intelligent edge.
Now, one example of this at work is the biotech company Jungla, which is using HPE compute power to essentially power genetic testing at scale. What does your speed make possible there that would otherwise not be?
Yeah, we are really proud to partner with Jungla, one of the startups in the precision medicine. But this is part of a broader initiative, which we call it Tech Impact 2030, which is a partnership with the World Economic Forum. In September, we announced a partnership with the Purdue University to improve agriculture, to improve the quality of crops and the quantity of crops. In fact, we have a fantastic use case here with live crops, so we can show how we do that with them. But with Jungla, we are really focused on the precision medicine, and it's all about improving the research on disease and the mutation of that disease. And using our memory-driven compute, actually they saw 250% improvement in performance on the large pool of data that they use to really understand the mutation of that disease.
So what do you mean by a 250% improvement on the understanding of the data?
Well, think about it. If it used to take, days to extract the insight of that data, now they can do it in seconds. So that's remarkable, because obviously they want to make sure they focus on the right aspect of the research so that eventually they can pass the research to people who can provide the cures. And today is all about time to value, and that will improve time to cure over a long period of time. So for us, is bringing that technology to do good, because our purpose is to advance the way we live and work. And so it's perfectly aligned to what we're really focused on.
Now, we've seen a lot more consolidation in enterprise software this year, but it seems like tech hardware players have been staying on the sidelines. Old HPE was quite acquisitive. What is your appetite for M&A at HPE?
Listen, if there is the right asset with the right complementary IP and the right talent, we will evaluate it. And we really like to think about the Aruba-like type of acquisitions, because we want to stay true to the core of what we are designing and then add those capabilities to a platform, because customers really like what we're doing versus trying to consolidate or do a PE-like type of approach. We really focus on accelerating that innovation through IP and talent acquisition.
Do you think we'll see more deals in general in tech hardware in 2019?
Hard to say. I mean, listen, the valuations are really high at this point in time. At least that's my point of view. Obviously, we think there will be more consolidation over time. But I think now the landscape has been set. What customers are looking for are IT solutions in blocks, where basically they can accelerate time to value through the data. And so more and more, that infrastructure has to become more optimized for the specific workloads, where compute, storage, networking, memory, all coming together to deliver a specific outcome. And that's why we have this unique vision called composability. We think cloud is not a destination, it is an experience, and we need to compose that cloud to the specific workloads. And so ultimately, all the assets have to come together in a way that they can deliver those solutions with the speed and agility that customers are looking for.
So what do you think a potentially newly public Dell would mean for the broader tech landscape, HPE aside?
Well, I think opens new opportunities, right? I mean, we live in a time where disruption is accelerating, so speed matters, right? And then control points and intellectual property matters. So I think, depending on what's happening in the market, we may see an acceleration of that. But again, valuations have to make sense. And at this point in time, I believe valuations are a little bit high, and that's why we see a little bit of correction going on in the market. We'll see. At this point in time, our focus is really on execution. And I think this year we have done a really good job, really proud on our execution front.
Now, you have embarked on a pretty ambitious plan to reduce HPE's expenses. You've pulled out of 74 countries. You've cut manufacturing locations from 17 to 7. Will we see more reductions globally?
Yeah, that's what you're referring to is called HPE Next. And HPE Next was our initiative to re-architect the company within, focus on our customers and partners. This year, we made remarkable progress. If you recall, the biggest change we did at the beginning of the year was our go-to-market, where we removed layers between myself and the countries. So we removed the regional structure and the sub-region structure. Now we have 11 geos that allow me to really get the pulse of what's going on in the market and then empower the people closer to customers to execute our strategy. We also simplified the number of processes. We are embarked on an IT transformation to modernize not just the processes but IT systems, and we have made great progress. And so, but remember, this is a 3-year journey that I laid out in 2017, so we have 2 more years to go. And the core of this is simplify everything we do to improve our culture of the company, and then obviously reduce costs that will make us more and more competitive.
The belief is that companies will continue to buy servers for data centers as well as public cloud services. We see, however, these public cloud services, Amazon, Microsoft, growing incredibly rapidly. So what does that mean for the server market? Does it stagnate? Does it plateau like the PC market?
So we believe the world will be hybrid. We stated that many, many years ago, and today is a reality. The fact of the matter is that customers will have application and data in both on-premises and off-premises. And I believe both markets, both on-premises and off-premises, will continue to grow.